Greetings, everybody. This is Jeff Scott. It's late Saturday night, East Coast time, almost Sunday morning, so it's okay to call this the 12th. Well, I was decidedly bullish last week. I actually listened to the video again today, and it was pretty spot on, my call, and we've got our broad-based breakout to new highs. The question now is, are we getting overbought? Have we gone too far too fast? Are we due a pullback? Or are we going to see a bit of a melt up? Time will tell, but I'm still bullish. Disclaimer, this is for education purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. That means I don't work for or with any software vendors. I have friends that are software vendors, but I get no commissions. I pay for the tools that I use. Trading involves risk. You and you alone are solely responsible for any investment decisions you make. This is purely for education. Any recommendations should be taken in the light of education. From time to time, I also discuss the use of options. There are many experts and regulatory bodies that feel options are very risky, and I urge you to not trade options unless you are familiar with them and have read the option industry council handbooks. As always, I point out where I came from and what are the tools that I use. It always starts with knowledge, and I like to think that I have sort of a marriage between Cancelim, as introduced by O'Neill, improved by Morales and Catcher, taken electronic by Ian Woodward and Ron Brown, and married to the science of trading that I've learned from John Person, author, software developer, indicator developer, mentor, teacher, trainer, and now friend. And John really helps me know when to take the trade, how to manage the trade, and he's got some great indicators that are instrumental in my trading and my success. This is my buddy George Lee, and George and I share the podium several times. I tried to get confirmation today. I do believe in March I will be speaking with George in Anaheim at the Greg Mills traditional spring event. On my calendar, I believe that event is 24, excuse me, I'm trying to get the calendar straight here. I think I'm going to hold off on telling you the date because I'm not sure that we have actually identified the date for sure. Once I confirm the date, I'll let folks know. I'll probably send out an email, maybe post something on the YouTube site. I will, if there's interest, I will hold a Friday HGSI only session locally in Anaheim, and I'll be participating with George on Saturday and Sunday, and there'll be live trading on Monday as well. This is likely to be, unless I come back in October for the same program, the only live speaking that I'll do this year. In addition, in mid-May, John Person has a program in Las Vegas. It's an excellent, historically I've been to several of them, excellent program where you will learn his style, his indicators, etc. Some of his indicators are built into Thinkorswim. Personsplanet.com is where you'll find more about that as well. I own lots of tools. You'll find what I do on these videos is pretty much the same thing that I do on my traditional daily analysis. I need a real-time quote system, whether it's TradeStation or Thinkorswim. I do use both of them. Genesis is a great charting and scanning platform, but it's expensive, and I don't spend much time with it on these calls because I know most of my followers don't use it. For analysis, HGSI and EdgeRater is where I spend my time. You can see a number of seasonality software programs as well as some of my favorite websites. Speaking of websites, here's highgrowthstock.com. Again, I do not get commissions. I support them because it's a great product, and I like to give some back because I've made so much because of both knowing the proprietor, George Roberts, and the use of the program. Two important things are the free 30-day trial that don't require a credit card, and then under investing strategies, you'll see things that I've done. My name is there, as well as Ron Brown and his HGSI in Action series. Different philosophies of trading, different ways of using HGSI, both successful traders, and I think you'll find that it is very useful from a learning experience. Stock patterns are cyclical. Last week I said it felt like we were back on the green circle again. We were. We had blast off, certainly end of the week strong. And now the question is, where are we going to go? How much longer does this have? As I said, I'm still long. And when I'm long, it means I'm taking bigger positions, buying stocks and calls, selling puts. I'll sell way out of the money calls when I'm this bullish. I'd rather sell covered calls or calls that are closer to the money when I think the market is going sideways or at risk. And I'll do bull put spreads, which to me is just like free money. Obviously, nothing's free. And someday you're going to sell a bull put spread. You're going to put in $1 and risk $5 on a trade. And it's 95 out of 100 times that trade's going to be in your favor, and then one time it's going to hit you. So they're not without risk, and I'm certainly thinking along those lines right now, although I will be watching the market closely and recognize that I'll very quickly unload positions and raise cash if the risk seems to be getting higher. Speaking of the markets, this is my TradeStation sector view on Friday. This is something that that was part of a John Person package. I stripped out the indicators just so I could look at a lot of different stocks and sectors, and you could see that there's a lot more green than red. I think it was very strong last week as well. Financial stocks broke out this week. Some broke out. Some look like they're still going to break out. There's been some M&A talk in biotech. They were strong early. They've weakened as the week went on, or mixed, I would say. But certainly a more green than red performance. Look at home builders. Home builders clearly breaking out. And that would include the ETF for home builders as well. This is a daily view. One of the things that I keep up on Thinkorswim. Upper left is the E-minis, then you have the NQs, then the YM. So the S&P futures, NASDAQ 100 futures, Dow futures. Lower left are the TFs, so the Russell futures, the VIX futures, and then lastly, the dollar. So you look at the, firstly you look across the top. You notice the little white circle or window is above them on the last bar. That's the highest price on the chart. So we closed at all-time highs on these major indexes, either at or near all-time highs. This is a broad-based breakout with the S&Ps, the NASDAQ, and the Dow stocks participating. Now, the one that doesn't have the white circle or white cloud above it is the Russell futures, but they also finished the week strong, and they're right below their all-time highs. Markets are strong. VIX is weak, continues at low levels. Someday we're going to think the VIX was cheap here and wonder if we shouldn't have loaded up. The problem is someday may be tomorrow, and it may not be for months away. And you look at the dollar, and the dollar is sitting here trying to make a move up. Can't see it well there, but it sort of failed below the 50. So we'll see if the dollar does another leg down or if it can regain the 50. Strong dollar, bad for the market, at least bad for some of the metals, gold specifically. On a weekly chart, again, you notice the little white windows or bubbles or whatever they're called above the price bars on the weekly. Again, weekly highest closing highs. And you could see on the weekly that the dollar had sold off, trying to regain. In this case, this is a 17-day moving average. The VIX weekly is weak, and the Russell is sort of trading in a channel here and trying to break out. If it takes out that prior high, then you'll have new highs on every major index. Certainly is a bullish feeling for me. Just another look at the same thing, and I don't talk much about my Genesis. That actually has seasonality. You can plot on the charts as well, the orange. And again, the key thing here is you have columns. You have the E-mini column, the NASDAQ column, the Russell column, the NYSE column, and the Dow column. You start with daily, first row, the second row is weekly, and then monthly. Everything's in a buy. Everything's got a green arrow. Even the weekly Russell, which was the last one to turn positive this week. Again, a very positive appearing market. Some of the background underneath, both the 10-year and 30-year bond have stabilized. They are both way off the bottom, which is good because it tells you that the economy is not cratering. But despite the Fed raise and the concern about additional raises this year, the rates have stayed in a very narrow range over the last couple of weeks. This is good for the market. As I said last year, considering the AD lines in white, that the AD lines for both the Russell 2000 and Russell 1000 are making new highs with price, so no divergence there. Hard to believe that we're going to see the market just collapse and die without any divergences there. Start to get a little concerned about breadth. The little green dot, which is actually an arrow, is showing where we are, the number of stocks above the 200-day, and then on the right above the 40-day moving average. We are in the higher part of the ranges, but still plenty of room to go. Perhaps the most concerning of the pictures is the 13-week, or the 3-month rather, new high, new low, 13-week new high, new low. Whenever we get to this bar here, which is pretty high, 94% or so, 98, 99%, when we get to that point, the market almost always reverses, and we're getting close. I mean, it would not surprise me at this point to see the market ease off and breathe for a couple of days before the next leg higher. A lot of these spikes are associated with some modest pullbacks in the market. It doesn't mean the market's going to die. Look at this one here, back in October-ish. Or actually, this may have been post-election. I can't tell the dates, but notice that the market in yellow sold off a little bit and then kept its run. But when it starts to get up here, you start to think about pauses. Commitment of traders, we spent more time on it last week. Still the blue being the professional speculators. To me, hedge funds, money managers are net long S&P futures, while the small speculators, us, are actually net short. That's usually bullish for the market. The daily McClellan has continued to be the fly in the ointment, where we continue to make new highs on the indexes, yet we're barely breaking positive on the oscillator, and did not get a higher high, and we're going the opposite direction. So divergence on the summation index on both the daily and the weekly. So that's one thing with the new high, new low that make you think that we're going to see the market pause sooner than later. The buckets, well, 70% of the stocks in the S&P 1500 are above their midline and their Bollinger Bands, and 13% are above the upper Bollinger Band. I find that in a bull market, when we get overextended to the bullish side, that the market does not necessarily sell off. It often pauses. We're not there yet. When you shift and you have 20 or 30% of the stocks below the lower band in a bull market, the market has a rip-roaring rally. We're in that rally right now. We are certainly have had a big move, but I'm not sure we've gone too far or too fast. So I think there's room to go. There's been no HINDY. The Hindenburg is a signal that signifies a top in the market. There has not been a major correction in 50 years that did not have a preceding series of Hindenburgs. And you could see the last one we had was a single one in December. I don't pay attention to single ones. They're spurious. I look for a pattern, which we've shown you in the past, that occurred with many of the older corrections, especially 2007, 2008. Market tone improves. Last week I talked about a series of kahunas and thought maybe that would be enough to get us out of this area with lots of red and push us into another bullish run in the market, which is highlighted by the green bars, and this is the third column over the Woody indicator. Well, we had a couple of red kahunas this week trying to interrupt that, finished strong on Thursday and Friday, and we're starting to see some green perk up here, and over the last several days, no red. So the market tone sentiment is improving. but not so bullish that, we've gone too far. And sector strength, we'll talk more about the sectors, but I just point out again in the Woody indicator, we're starting to see a bunch of green or strength in the sectors, which we haven't seen in a while. One of the things that I like to do is I like to follow what we call the Canaries. The Canaries are some of the major stocks of the markets, your Amazons, your Facebooks, your Googles, your Netflix, your Pricelines, your Apples, and your Baidu. I think that's the current makeup. And I use an artificial index of those stocks to see what the market as a whole is doing, with the expectation that this index may roll over before the market does and give me a clue that it's time to run for the hills. The key thing here is we broke out to new highs. The last new highs we got were post-election, and then again in January, and we've now set new highs. Again, is this market in trouble when the AD lines look so good? We're in new highs across all major indices, and even some of the bellwethers, the Canaries, are breaking out to new highs. Do we have a melt-up? Question mark coming. Know your news and your earnings. Some of the key things this week. Lots of Fed speaks, including Janet Yellen. I think she's got a couple of presentations this week. But Janet will be speaking on Tuesday and Wednesday. Some of her semi-annual testimony, as well as other Fed heads. Baker Hughes rig count's been interesting. Friday we'll have some leading indicators. Thursday we'll have some jobless claims and housing starts. We've got energy on Wednesday, I believe, and producer price index on Monday. Lots of stocks have earnings. So far, I would say this has been an interesting earnings season. I've had more stocks this time break out and hold their breakouts than we've had in the last several earnings seasons. Just looking at what's coming this week, there's a lot of nice stocks and there are a lot of big stocks, and several of them are on my buy list. A quote from me, and I think this is important: it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. You got to know when your earnings are scheduled, or you'll be have surprises. Market thoughts. This is basically the same story. I just had revised it a little bit each week. We're climbing a wall of worry. Trump tweets, flurry of executive orders, uncertainty over Obamacare successor. Trump's having several. Oh my goodness, this is not the last version. I am sorry about that. Huh. All right, well, I'm just going to tell you what I said. We've got FANG breakout. And VIX remains at lows. So, still think market's going higher. And we'll observe closely for signs of increasing risk. I am using lots of trailing stops here, as I am, like many of you, I'm sure, filled with profitability. It's been a great period for me of making money, and I'm sure I am not the only one. So that's the usual agenda. Let's start the top-down review. We'll start with TradeStation. We know from last week that my quick review of the markets in TradeStation showed the markets were strong and not immediately going to be rolling over. They were strong and looked like they were going higher. Now I need to be looking at these markets and make sure that we're not getting signs of rolling over. I am, as I was last week, net very much to the long side. And let's see what we got. We'll start with the E-minis. So E-minis are in a buy signal. So remember 5 things: person, buy, or sell signal. Number 2, color or paint bar. Elder indicator. Green means it's okay to be long or hold. Red, it's okay to go short or hold. Blue gives you freedom to do whichever you want to do. Third thing I'm looking for is where the stock price is in relationship to the envelope. It will ride up or down the envelope, as you can see here, but when it gets above or below very much, it comes back very quickly. Fourth thing are these red dots here. Sometimes you'll see green dots underneath, and those tell you to look for MACD divergence. And the fifth thing is I look at the high jump bars. How extended is this instrument over the last 200 bars? So S&P 500, 3 buy signals, green everywhere. Does have MACD divergence occurring on the weekly and monthly. This can go on for quite some time before it's over. It's center of its envelope here, tracking up on the weekly. High jump at 82. S&P futures look extremely strong. Dow futures. I don't want to sound like a broken record. This is blue on the weekly, but everything's in a buy. You've got your divergence, just showing that there's perhaps not as much push from the market to push this higher, but we continue to go higher, and the high jump is fine. NASDAQ futures. All right, so now we've got some issues. Yes, we are in a triple buy. That's awesome. Everything is green. That's awesome. We got the MACD divergence here as everywhere else. That's fine. We are a little bit above the channel. I'd expect it to come back in. Here's my concern. When I see a high jump of 100%, the high jump is defined. You take the distance and price to the 17-day plus the 50-day plus the 200. So you're measuring 3 differences from the close to those moving averages. You add them together, come up with a number, and then I plot today's value versus the last 200, and this is as extended as the NASDAQ got. The last time the S&P and the Dow were like this, I pointed that out, and they pulled back the next couple of days. Again, you don't have to see the market crash, but when you get to 100, every time you get any more extension, it's the most extended it's been in a year. Eventually that stops. The Russell, also in a triple buy, blue on the weekly. The Bongo daily and weekly, Bongo daily just turned green. High jump at 63, looks like it wants to go higher. So the troublesome part there is probably things look too good and that the NASDAQ is a little bit extended. Other than that, the rest of the markets look great. Let's take a look at the dollar. Had a strong day on Friday. But if you look at the weekly, it had pulled back, held at the 50 weekly, and we'll see where it goes. 50 weekly is kind of close to the 200 daily, which is red. So the dollar looks a lot stronger than it did 5 days ago when it was in a sell signal. We'll be watching that. We'll see how far it can go. It will impact on oil. Oil has been sideways, but did go into a new buy signal on Friday. It's in a weekly sell signal. And then gold pulled back a little bit with the strength in the dollar, and you could see that the MACD divergence in the blue paint bar. I also like to use the same analysis to very quickly look at my sectors. I look at healthcare. Buy, but blue, buy green, buy new monthly buy. High jump at 72. This looks great. Healthcare looks in good shape. Financials. Kind of going sideways, but a new buy came in Thursday. For whatever reason, I don't have a whole lot of XLF data, so let's just look at FAS as a surrogate. And you could see you got some MACD divergence. High jump is fine. In a buy, triple buy. Discretionary. This was weak, but on Wednesday it turned around. Kind of about the same time Amazon started turning around. Looks good. Everything's green. You do have some MACD divergence. Technology. The strongest we're seeing so far, riding up the outer envelope. with MACD divergence on the daily and the weekly and a triple buy in green and 97%. So where are we the most extended? Well, this is probably that component of the NASDAQ that's at the most extended right now. That's technology. Industrials. A buy signal as well. Looks pretty good. Looks like it's right in the middle of the channel here, up top of the channel on the weekly. Staples. Wow. When I say broad-based market rally, everything looks great. Staples in a nice run. Again, the MACD divergence is a little bit concerning, but you got triple green buys everywhere. Materials. So, steel had and some of the ore companies had a big move on this week on Friday, Thursday and Friday. You can see you had a new buy signal come into materials on Friday. Still in a buy weekly and monthly, so this is sort of a kind of a flag on the weekly and potentially a reversal. That's very bullish. Utilities. All green except for the monthly, which is red, kind of sideways movement. And lastly, energy. Energy is the one thing that's red, but even energy the last couple days moved up and had a green bar on Friday. But energy is in a daily, weekly sell, monthly, and longer term it's in a buy. Well, that was a very quick look at the industry group or the sectors, and except for energy, boy, is this a strong market. Now things can change at 9:31 on Monday. Could change 6 p.m. on Sunday when futures open up. But right now, I think stay the course long is the right thing to do. Next, I'd like to look into Hgsi. And I start with my top-down view. So what I'm going to do is I'm going to go over here and I'm going to find in the Woodward and Brown user group full, major markets plus, and then we'll go to T1, which is top-down, price and volume, heavily weighted to Friday, and show you that the strength of this market on Friday, ranked by raw combo, mid-cap, silver, NASDAQ, NYSE, Dow. Interestingly, the Russell dropped down to 14, NASDAQ 100 was number 20. Oops, hate when that happens. If I look at one-day performance, you could see silver and gold had a big move. Russell was actually up on the day. If we look at for the 5-day performance, silver and gold, big moves. Transportation had a big move. This market's very strong. Let's take a look at some of the key components. S&P 500. Hold on a second. I did something here that all right, that'll work. All right, there's the S&P 500. So what do we see here? Let's go to a clean view. On the top are the bongos. This is a not proprietary. We tell everybody what the formula is, but it is a timing system that I was involved in developing, Gang of 5, years ago. It's a great, somewhat slow, but safe timing. I like to be long when the weekly bongo, which is on top, is green. I like to be out of the market when it's red. When the weekly is green and the daily, which is the second bar, turns red, that helps me find pullbacks. And then as it turns green, I want to get back into the stock or the index. Next down are the Hindenburgs, and I'm looking for patterns. And I know I do this every week, but every once in a while somebody new comes by. Let me just show you what happens in the time of trouble. This is 2007, before the market rolled over. We're not looking for a single signal. We are looking for multiple signals that occur in the setting of a market that's about to roll over. So I paint them on my bars. When I see more than one, I get excited, especially in a short period of time. When I see one every month or two, I ignore it, or I look for the next one. So on my prices, I've got Magenta's an 8-day exponential, then 17, 50, and 200 simple. Down here we have Kahunas. These are just big movements within the Bollinger Bands. Blue is good, red is bad. And the lowest button we have our Eurekas and Phoenixes. These are market indicators. These are sort of the Hgsi interpretation of a follow-through day. So I like colors and I like to be able to scan for things. And so here's when the market reversed. Yes, this was the day to have gotten in when it touched the 200-day moving average. But more importantly, the next day we had a eureka. So the market turned around. That's not calculated on this thing. It's calculated on the NASDAQ or the NYSE based upon settings. We had a big kahuna. A darker blue is more important. And then a couple days later, my bongo turned green as we broke above the 50-day moving average, and the stock's been in a big move since. So this is the S&P, all-time highs. After the gap up on Friday, looks bullish. See what a weekly looks like. Looks bullish. No reason not to think that this market goes higher, except before too long it's going to say it's had enough. You just don't want to be sitting on a lot of positions when the market decides to roll over. But for now, I think the market goes higher. Dow Jones Industrial Average looks just like the S&P, breaking out to new highs. Bongos look good. The NASDAQ Composite, ditto. Nice move here. Remember that you could probably put yourself some nice channels in here. And we are at the top of this wedge, rising wedge. And I'll be looking for breakdowns below that wedge. But we're at the top of the wedge. I told you before we're extended. If I look at a view that actually has the high jump on it, we should be near the top, in which we are. Again, we're at a point where one might expect a correction to occur, or at least a sideways movement in the NASDAQ. The NASDAQ 100, where those Canaries live, also breaking out to new highs, extremely strong. And then the Russell 2000. This is the laggard. Let's just figure out where our last closing high was. Well, we may be at a new closing high. The closing high here, this is on the daily. The closing high here was 1386.66. Here it was 1387.95, and here it's 1388.84. So it looks like we got a new closing high on the Russell as well. I hate to get too excited because it could turn on a dime, but right now I've got to be bullish. And my portfolio reflects that. The dollar, trying to get above the 50. Notice the bongo is red, just showing the weakness and the pressure on the dollar. The VIX, talk about weekly bongo being red most of the year. The VIX is kind of at a place where it's been the last several months, but it's also about as low as it gets. And when the VIX goes up, that'll be pressure on the market, or maybe the pressure on the market causes the VIX to grow up. And it's these spikes here that, with all the arrows, is when we get into trouble in the market. So when the VIX is low, look out below. To me, that only applies if the VIX starts moving up. And when the VIX is real high, it's time to buy, but it's when the VIX is heading down. So right now, not much help there. Gold and gold miners are kind of interesting. Gold, tough day on Thursday. Friday had a recovery day after gapping down at the open. It looked like the dollar was going to get stronger, and then it backed off. The bongo weekly is green. Has some resistance here at the 200. If you're a gold bug, you'll like the miners even more. And as I put up the gold miners, notice that they did break above the 200. The bongo's been green longer. They closed above the 200 on Friday. I'm more optimistic on miners than I am gold. And perhaps one of the differences, I think silver looks even better than gold right now, and let's find silver. And you could see silver is right up at that 200. It's going to have to close above it for me to be a buyer of silver. But right now, I think miners and metal companies look better perhaps than their underlyings. So, again, I've now looked at multiple different ways of looking at the market. So far, the only bad things we've seen is that, let's see, The NASDAQ is extended. Technology is extended. Got some overhead supply on metals. But this is a market that is very strong right now. Next thing I want to pull down is 07, which is the industry groups. As you can see, we've got 172 of them. Let's just look at them by momentum up. So this is a 2-day force. And you got to always make sure that your raw combos are highest number. So I've got 82 groups have a 2-day force to the upside. If I look at 2-day force to the downside, only 2. So tobacco and generics are weak. And I like looking at the long side. And as you could see, we got a number of our favorite groups, steel and metals. Number 1, number 4, number 5 are steel and metals. You look at energy, number 2, number 6, number 12. So energy in number 27. Energy is very strong. Footwear, where the heck did that come from? It came from Skechers. Maybe what's been a slide caused by Under Armour and others, maybe it's done. Some of our favorite groups, you could see banks are still strong. Semiconductors are strong. We're going to look at some of these right now. Steel raw material suppliers index. These are the major groups. I know Cleveland Cliffs had a 52-week high this week. Now let's go into my webinar view. So what I'm adding here is a couple of things. The third thing now, I ignore the Hindenburgs. We know we're not seeing one. We now got a green weekly bongo. The third bar down is now accumulation distribution. The darker the green, the more accumulating. The darker the red, the more distribution. Then we have a 13-day and a 2-day force. Here's the high jump bar. This is a red candle high and a green candle low. We've added industry group, which is this dark gray line. We have PSAR dots. And we're looking at on-balance volume. And here's our kahunas. And I overlay the eurekas with the volume window. And remember, eurekas in green, bullish follow-through day, red, Phoenix, bearish follow-through day are calculated on NYSE or NASDAQ, depending on settings, and are not at all taking into account that individual stock. So Cleveland Cliffs had a viable gap up on Thursday, closed near the high on Friday. They give up some, not a big surprise to me. Everything is green above. Look at the earnings per share coming into the stock. So we're dropping off. If we make our numbers, just imagine we make our numbers. You drop off 14 and 7 over the next 6 months, 21 cents of minus, and you replace that with a 59 cents. So 59 plus that 21 cents you get back, all right, because it's not against 21, it's against minus 20. You're adding about 80 cents. 80 cents, if you keep a multiple of 30, that'd be adding about 20 bucks to this stock. Well, obviously that's a little bit far-fetched. But let's say you get your 21 and your 38 here. That's 59 cents. You're growing, and that's for half the year. And let's say that its earnings are continuing to grow. So let's say you got $1 for a full year. You're growing at 200 times. Do you see the multiple dropping below 10? No. So unless Cleveland Cliffs misses its numbers, Cleveland Cliffs goes a lot higher. I'm buying Cleveland Cliffs, even though it's a little bit extended. Notice the weekly doesn't look so extended, does it? Breaking above the 200, everything is green. I think that Cleveland Cliffs might be a place to spend a little money. And by the way, it's a cheap stock. Vale is a Brazilian version of Cleveland Cliffs. Also great numbers coming in. Really, in the metals, you'll see some great earnings as these stocks are turning around and getting stronger. I don't usually go too far below the index. So we got a couple of these stocks off the top that look good. I like Cliffs a lot. Exploration and production, not nearly as exciting a charts. Remember last week's pattern? uptrend, pull back to the 50 or the 200, and then take off with momentum. It's a very loose chart. It's an expensive stock and probably not where most of you are going to play. This is Pioneer Natural Resources. Notice the earnings per share growth is strong. Notice next earnings are not to April. Notice my weekly bongo turned green. Notice we're living here on the 50 with a number of kahunas, pocket pivots. This stock is breaking out. One could even start playing the breaking out from a multi-month high into new highs on Friday. This looks interesting. Again, a very expensive stock. Energen, similar pattern on a cheaper stock, pulled all the way back to the 200, moving up with momentum. Like to see it above the 50. So that's made it to number 2 on the groups, but I don't find them nearly as exciting as I did perhaps last week. Apparel footwear, can you say Skechers? We'll go through and see if any of them look like they're buying candidates. So Skechers was certainly in a long-term downtrend. Peaked in the 50s, pulled back to the 24 range, 23 range, had a big move on Friday. Got above the 50, the 200, and the 17 on a viable gap up. You know, it makes money, although its earnings per share growth has been kind of tepid. We know earnings are out. You know, typically on a stock that's this far below the 200, I don't play all viable gap ups, but you know, I could buy it at the open, if it takes out the high on Friday. Put my stop at the bottom of Friday, and if it's a well-behaved Bible gap up, I may see some inside days before I take off. That might be one way to play Skechers. Looking at the industry group, Nike, I like this one better. It's broken well above the 200. Lots of green, kahunas and pocket pivots. The pocket pivots are this group here. Looks better. Columbia Sportswear. As you see, a big turnaround in this group of what have been beaten down stocks. Next group down, steel producers. So last week I pointed out that many of these stocks were exhibiting my favorite pattern. And my favorite pattern being, hold on a sec, this. Again, this is a little loose. I'd rather see a straight line up, a pull back to that 50, and a takeoff of that 50 with momentum, looking at pocket pivot and kahunas as momentum. Love the earnings per share growth. U.S. Steel earnings are out. Next earnings are not to April. This is one that I did buy. I already had some I added to on Monday. And what I wanted to see is to take out the prior high. Got filled on Wednesday and broke out on Friday. I love this pattern, uptrend, pull back to support with momentum. It's sitting right now still very viable. This was Thursday, little move up on Friday, a little consolidation day. MT, 5 days ago, was sitting here. Now, Thursday and Friday, it had kahunas, big move up on Friday. Actually, that's I don't know if that's 3 days or 2 days. 2 days. When you see 2 days in a row kahunas, you get interested. Nucor dived down a little further than I would have liked, but had the same move on Thursday. Steel Dynamics. And this is kind of what many of them look like. Pull back to support in a move off with momentum. That's my favorite signal. We'll look at some more of those stocks in a little bit. Base metals. Freeport-McMoRan, what a move. This is a stock, and the move wasn't necessarily Friday, by the way, although that was a big gap up, and then it sold off the rest of the day, still closing up on the day, 2.66%. Like many of these stocks, including my favorite one, This is a stock that was a $4 stock a year ago and has moved up to $16. So it's had a huge move. Look at the industry group strength. Let's go back here. If I was putting new money here, I'm not sure I'd be jumping in until it took out the PSAR dot. I'd like to see it do that with some momentum. But Freeport-McMoRan, look at the earnings per share growth. It's had a great move. Now, I usually don't go fishing below the index, which is the next thing. So let's put my stock pick success of 2016. Let's look at Techminco, which is now TECK, which hopefully you're still holding. And if not, I think it's going again. So here's Techminco. The reason why I like it, it's my pattern. It doesn't look like much of an up move, but this is coming from less than 10 up here to 26. Sideways, sitting right below above the 50, right below the PSAR dot. Had a pocket pivot, kahuna, and a mobile breakout on Friday. I think that Techminco is looking good. Why am I so excited by it? Because a year ago I said when it was about $4, I said to buy it. Go back and look. It's in this period of time, and then again here. But my initial buy alert was right around here. And this stock has gone from 4 to 24. And what I said then was the last time I bought the stock for $4, it went to 40. It was one of my big hits coming off of the 2009 lows. And look at the earnings per share growth. This is a sector. It's in the same sector as Cliffs and Valley. I'm not sure why it didn't make it, except probably because, does that show 0? Yeah, I'm not sure why it didn't make the list. It's because it's not showing an industry group. George, if you're listening to this, you need to assign Techminco back into its industry group and sector. Now I know why it's not showing up. They changed the name from TCK to TECK. Love that stock. You notice the metals are strong. Oil, gas services. Here's Noble Corp. Again, last week, a lot of these stocks were having my pattern. Pull back to the 50 and momentum. Look at this one here. This is a low-risk buy. Everything is green above. A mobile breakout from a squeeze. You broke through the PSAR dot. You're sitting above the 50 and the 17 and the 200. You had a kahuna. You don't have any earnings. That's the problem with Noble Corp. But just how I would play this stock is simple. If I wanted to go long, I might look at the stock this way. I might say to myself that if Noble takes out its high from Friday, which was 760, so if it takes out the high from Friday, I might want to go long. That's to be about $7.65. If the stock trades below the low of the bar there or below the 50, I don't want to be in the stock. So I might put my stop right below the 50. So the 50 is at 682, so I might put it at 680. So I'm risking about 8 or 9%, and that's how I would play the trade. You could buy it at the open, but I want to make sure it's not going to go back into this range. So that's how I play stocks like this. I basically find them sitting on support, big momentum coming in, reasonable stop placement, and take it if it breaks out further. So I like Nobel Corporation. Schlumberger, a little too deep in the pattern. This one did not work last week. 1, 2, 3, 4, 5. Last week here we had a kahuna. It looked like it wanted to run. This is why I typically would say I always look to take out the prior day's high, because when the market's chopping around like this one is here, 2, 3, 4, 5, you don't get filled. No harm, no foul. We'll show you about not getting filled on Bank of America. Back. Communications equipment. Oh, Inferna, whatever. Talk about earnings blowout. I'm assuming that's what must have happened. Look at the Bible gap up here. Let's just drop a weekly. Doesn't look so bad on a weekly. It looks like it's starting to move. It's got to get above the 200 weekly. Look at the group strength. Inferna is in the communication equipment. Let's look at more info from Web. Let's look at FinViz. Was it on earnings or is it being acquired? Oh, come on. Sales fall, but the bottom might be in sight. Sales outlook beat. Bulls see rebound coming. Why is it soaring? All right, so I got a stock that had huge momentum, breaking out, cheap stock, don't like the earnings. Earnings are out. I might be interested in buying some Infinera. Sierra Wireless, a lot better looking chart, but it just had a huge move, and I'm not sure I want to chase it. I don't know if this was a sympathy play or its earnings came out too. So I always like to look at FinViz and see what I can find out. Why? Solid beat. Well, when I start seeing an industry group where the stocks are beating, that's a place. Finisar, maybe the best of the bunch looking here. Uptrend, sideways, and now looks like it's breaking out with some momentum, multiple pocket pivots, a kahuna buy there. Went green up here, great earnings per share. I like Finisar, and I would put that on my buy list. All right. Back. And I go through the top 10. Application software, Activision Blizzard. The first three are gaming software. Activision had surprising numbers. Off of support with a big kahuna, Bible gap up. I thought that moved too much for me. Electronic Arts had earnings come out earlier in the week, traded off, but big move the last couple of days. Take-Two, a leader, accelerating, looks great. And here's Paycom. You know, Paycom was a stock that I have a position in, and you know, last week I showed you one that I should have gotten out, but you know, some of these options I have in going into earnings, sometimes I let them ride when I shouldn't, and sometimes you just get lucky. And Paycom had a big beat and a big move on earnings and a raise. Earnings are out. I'm not sure I would chase it. I'm in a 45-55 spread, and I'll probably get taken out by the 55, but we'll see. I may play around with that this week. Paycom had a good move. Now these are not great looking patterns. For the most part, they're choppy all over, but definitely something's moving on into this group. Next group down, semiconductors. Now these ones are extended. There's a lot of great stocks here, but as a group, they're extended. I think we'll see some of them have pulled back some. Here is Qualcomm. It pulled back a lot. Earnings are decelerating. Earnings date is out. You know, if I see it put in a bottom here and start moving up, I might nibble, but the bongo is red, and I would probably pass. AMD, we talked about last week. They've got some new processors. Nice uptrend from 5 up to 14 over the 8 months that are being shown here. At near its all-time highs. Looks like it's stalling here. Need to watch. Coherent broke out on Wednesday on earnings with a kahuna. Great earnings per share growth versus PE. It's just a very expensive stock. Silicon Motion's been in a sell-off for about 7 months. Earnings came out better than expected. Pocket pivot kahuna. Interesting. I don't usually buy things where the weekly bond goes red. And then I have a couple of these. MaxLinear is one that's on a tear. Post earnings, great move. Don't like the earnings growth coming. Corvo has in a nice breakout move here. Its earnings are also out, but earnings look like they're slowing. And I have Broadcom. And you can see with Broadcom here, if we can get it, big move up, but going sideways now. So this group looks like it's taking breathers. And then lastly, in the top 10 are banks. And these are regional banks. Look at the move that this guy had this week, 21% this week. Lots of positive movement. These will benefit tons from the regulatory pullback as well as from any interest rate reduction or increases rather. And this one's moved too far. But if I look at them, this is what I see. I see a lot of stocks run up, sideways, momentum, waiting to break out. This is Regions Financial, PNC, Fifth Third, KeyCorp. I mean, this is an international bank. Oops, there's KeyCorp again. Zions, I like this one a lot. It had a PSAR reversal and a pocket pivot on Friday, Kahuna on Thursday, or you could always just do KRE. Now, I want to revisit one that I talked about last week that's a bank but not in this group. But my computer's slow today. And there's KRE, looks just like these banks. That's what I'm playing. I have a position in Bank of America. I was looking to add to it. And let's just go back 5 days ago. This is where we were sitting last Friday. And I said, God, I love this pattern. I remember saying it. And I looked to this, I said, big uptrend, sideways move, pull back to support. It's right above the 50. It's already moving. Mobile breakout from the squeeze, a pocket pivot in Kahuna. And as I just showed you, the way I play stocks like this, let me get back to that date. I think that was it, 2, 3, yep. Is that 2, 3 I want? I don't want 2, 3. I do want 2, 3, sorry about that. The way I play something like this is simple. Just like the last stock, I usually pull up the numbers and I say, gee, it closed at 23.29. Let's put a buy stop in at 23.30. But then I got a PSAR dot here at 23.48. So my buy stop here is at 23.50. Okay, that's where I want to go long. My stop is going to probably be sitting on the 50. The 50 is at 22.40, so I'm going to put my stop right below that. Because if I close below the 50, the reason why I bought it doesn't matter anymore. So that's the order I put in. Now the beauty of that is if the market turns down, I don't get filled. Where you get burned is if it trades up and then it pulls down. I don't get filled on Monday, sort of an inside day. Don't get filled on Tuesday. Oh boy, I'm so glad I didn't get filled. It's pulled down to the 50. I'd probably reset my bar and bring it down to right above that PSAR dot if I was still interested in the stock. PSAR dot's now 23.48, so it's still about, no, that was last time. So the PSAR dot now is at 23.39, so I might have my buy at 23.40. And let's see. High was 23.24. I haven't gotten filled yet. So I spent a lot of time, but what's interesting here is I still love this stock. So what am I going to do now for Monday morning? I'm going to put my buy stop right above that PSAR dot, 23.35. I'm going to put it in about 23.40, say. So interestingly, I'm now going to try and buy it cheaper. And my stop is going to be right below that 50-day moving average. Maybe the low of this day is where I want to go after, which is at 22.45. So I have raised my stop and lowered my buy price. So the longer that this stock continues in a squeeze, I'm just going to wait to get triggered. The yellow is the squeeze. And the longer it's in a squeeze, I'm going to end up having less risk because my buy point's getting closer to the stock price and my stop is moving up. So Bank of America didn't fill, but I'm going to be watching it this week as well. So see where we are here. And that's our top 10. I do want to point out that a lot of strong REITs on my top-down review. Biotechs, especially some of the cheaper ones, look good. Airlines made a bit of a comeback. And the diversified banks still look strong. And as you just see, they didn't do much this week, less than 1%, except for this international bank. So now what we've done is we've gone through a top-down approach. We looked at the market. We looked at some of the leading industry groups. We have a sense of whether we think the market's going up or going down. We identified a couple of stocks. And what I've done in addition is I do a bottoms-up component where I look at about 500 to 600 stocks, and I end up with my buy list for the week. And then for every stock that I'm on my buy list, I do the same type of analysis of setting my stops and my stops, my buy stops and my sell stops, and I've got them pre-programmed to see if any of them will get filled. Here is the buy watch list for this week, and you could see, well, gee, many of those stocks are stocks we've already looked at. In fact, very many of them are stocks we already looked at. And there's a lot of stocks there. I'll show you a couple of my favorite patterns. Unfortunately, my favorite one up here, I can't touch because earnings are out this week, and I just won't do that. And that's Annaly, N-L-Y. I don't know why it's so slow today. Oh wait, I have a feeling I know why. Nope, that's not why. The reason why I liked Annaly, let me look at it now. Uptrend pullback, sitting right below the 200. Everything turned green. It's moved off of the 50 with nice power, pays an 11.4% dividend. That's what I liked about it. Potential for growth and price and a lot of dividend there to protect me. Other things on my list that I thought were interesting. Here's a cheap biotech. And why was I interested? When I see this many kahunas coming in, it turned green there. I like that. But this is a high close doji that occurred on Thursday on the daily. And when I drop to the weekly, this is a stock that looks like it's bottomed and moving higher. And this is also a high close doji. So that was one that came up. In fact, if I go into my trade station, we might see a little bit easier why I liked it. So, you know, it's interesting. It really depends on what look you're looking at. So here is my trade station. So I've got a high close doji occurred on Friday on the weekly on, on Elder Biopharma. You notice that my momentum indicator, even though the stock's dropping, has been getting less negative. On the daily, in fact, it's turned positive as it's moved up. We're in a daily and a weekly buy signal. OBV is strong on daily, about to break its moving average on the weekly. On this other volume indicator, notice how it's getting less negative despite the price getting cheaper. There's a lot that I liked about Elder Biosciences. So I basically have created this list. Now, one thing I could do is take my buy watch list and just out of curiosity, how many of these are pullbacks to the 50? All right, here's 3 stocks that are, you know, my favorite setup. So there's Anworth, so uptrend, pullback to the 50, mobile breakup from a squeeze, and a Kahuna pays an 11.4% mortgage. Earnings are this week. KB Home, a lot of builders made my list. It's got great earnings per share growth, uptrend, sideways for a while. Kahuna, everything is green. I'm a little bit bothered how far away it is from its PSAR. And then Night Transportation, pull back to support right below the 50. Looks like it wants to roll. But I typically will also go to the all securities view and drop that view in. And these are some of the stocks that popped up as showing pullbacks to the 50 and showing momentum. So I mentioned last time, there's my KB Home, that energy goes into a strong period of time. I haven't looked at DB Oil Power Shares ever, probably. Just curiosity, does it have my pattern? It's kind of flat. Yes, it's moved up from 7 to 9. Sitting right below the PSAR Dow, the Kahuna. So it met the pattern, but it's not that exciting. So I've now shown you some of the stocks that I liked. Again, I did point out last time that there are these smart groups here. So you can open this up, and you can open my name up, and you could get an idea of some of those stocks that are 50, pull back to the 50 with a Kahuna or a momentum sign. And so these are some that came up. So I said any of these were ones that I really liked. I showed you Night already. Another thing that I'm looking at are stocks right below the PSAR dot who are squeezing. Trex. Don't like the fundamentals, but I certainly like the pattern. So you have uptrend, 33 all the way up to 69. Pullback to support, sitting on a squeeze with multiple moving averages coming together. Mobile breakup from a squeeze and a pocket pivot. This one looks like it wants to run. Trex also made it to my buy watch list. Other things here that looked good. Yeah, several of them look good. I don't remember Walgreen Boots, Alliance. It's kind of a sideways. No. I like to see it moving up. Hudson Tech. Looks like it's getting ready to run again. I have no momentum here. You see no blue here. Okay, I do see a breakout, a mobile breakout Thursday. It's in a squeeze. I need to see a movement. I need to see some momentum. But I use these to help me find stocks to buy. Now, the cool thing about those smart groups, which are, just to point out again where they are, in the designer, you have 3 major groups. You have references, you have your groups, and then you have smart groups. And you'll notice there's a date here. If I have checked off enable intraday, and it's 3 o'clock, 11 o'clock, 4 o'clock in the day, and I run a Metastock update, including intraday data, I will repopulate those lists based upon the current market update. So I can be looking at 3:30 for stocks that are meeting the criteria that I am interested in. So that's really cool. You can do it any time of the day. It's about a 15-minute delay on the stock price. I mentioned John's stuff last time, and I just again want to emphasize, I'm looking for a specific pattern. this is what works for me. Somebody said something that I was listening to the other day, and I agree. There are lots of different styles that you can do, lots of different ways to trade. Pick what works for you and get good at it. I like uptrending stocks that pull back to support and have momentum. Therefore, things like John Person Buy 2, which is a daily buy signal near pivot support, are things that work for me. Or a buy signal 5, which is a daily, is this the one I want? All right. A daily buy when weekly's in buy mode with volume convergence, and there wasn't any this week. But I will look at scans that meet my criteria. I forgot to update the scans. All right, the scans are updated. They're just not updated on this computer. So I'm going to update 2 of these, and I'm going to come back when they're done to finish up. Okay, I'm back. Sorry, I forgot I hadn't updated my scans on this machine. I just wanted to look at 2 scans. These are scans that I found that really reflect the types of stocks I like. So I go to them constantly. One of my big holdings is Amazon. So I'm looking for stocks that have a new buy signal 2 would be stocks that have pulled back to support. Notice the support, those white dashes and blue dashes, that have a new daily buy, so it's pull back to support, but have a weekly buy, so they're in an uptrend. This is the type of stock that I look for. So Amazon, I'm back long, been long. Activision was one that we talked about earlier, had a big Bible gap up today. For those who wonder what all these dots and all these things are, I'll just tell you real quickly that I'm able to reproduce pretty much most of the indicators that I have in Hgsi, and what I do is I'm able to plot 3 time frames of the bongo, so I want to make sure my weekly bongo is green. I'm able to plot these combined dots are Bible gap ups, pocket pivots, mobile breakouts. If there was a yellow one here, it would have been a squeeze, PSAR, which reversed, and then a kahuna force. And then the one that's missing is also a red candle high or a green candle low, which we don't have either right here. So I basically can run my scans. Here's CF, which is a fertilizer company. It's in a big move, but again, it's flagged on the weekly. We picked it up here on the daily as a pullback to support. There's a white and a blue support there, and a new buy signal, and a high close doji came in. So I find stocks. Here's Hgsi, been going sideways for a while, you can see, but it's in a weekly buy. And notice that it had a new daily buy come in, OBV breaking out, and see the yellow dots here, mobile breakout out of a squeeze with a kahuna. So I'm able to merge my John Person indicators, the volume, his MACD histogram, and the indicators that I use everywhere else. Don't always get a lot of stocks on this one. These would be ones where you have volume convergence, meaning that not only am I having the pullback buy at the right time, let's look at Lennar, another builder, that I pull back to support here, a little bit of a pullback, new buy signal, but notice OBV has been going up even though the stock had been coming down, and I'm looking for that convergence or positive divergence that other people call. So I have a number of scans that I use. I think Noble Energy was one that we may have looked at. And again, it's got a Bible gap up and a pocket pivot, a mobile breakout coming from a squeeze, a PSAR reversed, and a kahuna. It also had a PPS buy signal. It's in a weekly buy, had pulled back to support. And again, the types of stocks that I look for all day. The advantage of something with a scanner is that I could take large numbers of stocks and scan them. And in fact, I am scanning here the entire universe of all stocks, including over the counter, and I'm limiting them by last price over 5 and volume over 250,000. So I use TradeStation scanners to help me find the stocks. Now the problem with the scanner in TradeStation and it's not a big problem, is that it only works end of day. So at least on the daily scan. So my daily scans, I can only do at end of day. My weekly scans, end of week. My monthly scans, end of month. So for example, if I'm more concerned about a weekly scan, I might want to find something that's got a weekly high close doji and volume that's going up. So let's see if any of these pop up as winners. Oh, remember I hadn't updated it. These haven't been updated yet. I'm not going to bother doing that now. Now, within TradeStation, we also have the radar screen. The radar screen updates and treats the bar as it's the end of the bar. So for example, these are the stocks that I believe are on my buy watch list. Let's see. Yes. And so I'm able, real time, and on a higher resolution, I get more stocks and charts on. The flashing light says the current bar had a high close doji. The solid light, the prior bar, had a high close doji. So I could see on my buy watch list, I have lots of high close dojis, including many that occurred on the last trading day, which was Friday. But I can also, as I think I showed you last time, be including in my scans looking for things like a squeeze, a mobile breakout from a squeeze, or a breakdown from a squeeze. Nobody's breaking down, no surprise, but how about breaking out from the squeeze? These are the stocks on my buy list that were mobile breakout from a squeeze. How about pocket pivots up? Lots of pocket pivots up and pocket pivots down. Hopefully I don't have too many of those. There was one, the Cleveland Cliffs. Interesting. Now the nice thing about the scanner, or the radar screen, is it works during the day, and again, it updates on every bar. If I'm looking for Bible gap ups, I can be monitoring and looking for when I get both the amount of the gap and the adequate volume, so I know that I get my Bible gap up, and then I know if it's above or below the 50-day moving average. In addition, I can scan for earnings dates. So to me, TradeStation is a very important part of my trading repertoire, and it's a combination of what I do in HGSI, some of our Woody indicators, and John stuff. Now, many of you don't have TradeStation, but you do have Thinkorswim. It's been a great 2 months. That's all I can say. And within Thinkorswim, I can do things like scan for a John person buy signal, and maybe look at, we'll just look at plain old at a squeeze. Hit scan, and this will tell me all this, and I can update this during the day. So their scanner will give me current results as if it's the end of the day, no matter when I look at it. So these are some of the stocks that had a PPS buy signal. Now I've included my kahunas, my HCDs or LCDs, my pocket pivots, my Bible gap ups, and my earnings dates. So I can see that, whoa, here's that Noble Energy again, had a, it has a PPS buy at a squeeze, because that's a scan we looked at. It's got a kahuna and an HCD and a pocket pivot. So let's go look at it. So I click on red, and then I should go to my charts. And we turn on NE. Yeah, there's a lot of stuff here. So, but I basically have a lot of different things sitting on my charts. But up at the top, I know things like the volume is 195% of normal. We closed this bar at 100% of the bar. Okay. It tells me, this is on the hourly. If I go over to the daily, I see, again, high volume. You can see 23 million versus 12 million. We closed on the daily at 61% of the range. 1 day price change of 10.26%. The 2 and 13-day force are positive. I had a 5 and 10-day pocket pivot. Percent B at 0.7 tells me where it falls within the Bollinger Bands. The percent B change was 0.597. That's why it's blue. It's a kahuna. It's had a mobile breakout from a squeeze. It's in a daily bongo. Here's my weekly bongo. Week to date changes up 0.41, so it was been down earlier in the week. And as I look closer at it, I see a couple of things. I see the blue there is a PPS, and the orange is a HCD, which I told you that we had as well. So I'm able to bring into my charts. On a higher resolution computer, it looks much better, but both of those things are standard things in the scans. I have a number of customized scans that I use, and I use them, and then I include, as you'll see, this is one looking for institutional buyers. Run scan. Boy, there are lots of them. Same stocks all over again. ATVI. And again, I can look for, this is the one that's looking for the institutional buy. And I can look to see how many of these have high closed dojis and which ones are they. There's that Noble Energy again. How about pocket pivots? Whoops. How about Bible gap ups? And how about stocks that have their earnings date coming out soon? So I'm able to try and duplicate. So if you come to my seminars, I do spend a lot of time on how I do this, on those indicators which are free. I freely distribute. I'm a big fan of John's package. I can reproduce much of it within Thinkorswim, but I really think John's package for TradeStation is the way to go. I will certainly next week or the next video I do announce about the Greg Mills meeting and whether I'm having a pre-meeting. So this has gone longer than I wanted it to. I'm tired. I'm sure you're tired of listening to me. Thanks again for joining. hgsidoc@gmail.com is my email for any questions. And y'all have a great week, and let the bulls run because I'm still long. Bye, everybody.